Others are still joining. So what we are going to discuss today is on purely on the working capital part. So my journey to working capital is quite interesting. So may not be completely like Steve Jobs, what he said, but I have always believed in the destiny and the fact that whatever that you are doing today will ultimately lead into what you are expected to do. So I started my career in engineering, moved into IT. Finally, after the SAP stint, I went into costing field for 3 years, and then I started working purely into the business transformation for MSMEs. So last 3 years have been an amazing journey wherein we have worked with a lot of companies to help them understand what are the challenges that they are facing and how can they address the challenges that they are facing from the working capital perspective, from the business transformation perspective. And the journey has had its own advantages. We have seen a lot of challenges. We have seen how MSMEs have struggled over the years, whatever the challenges, how they have faced the challenges. And somewhere along this part, everything was going right till last year before we were actually hit with the COVID. This is a situation which is something that we had not expected, nor anybody had planned for this for a long, long period. So there was really no way for anybody to understand what would be the right way to address those challenges. And that's when we were struggling as a advisors to these companies. We were also struggling regarding what should be the right advice that we can offer to them. And that's when the whole search for the reasons started. And then we started looking at what we can do well with them. So let me start with the presentation now. So this is an exclusive seminar wherein we are going to discuss about the working capital. I'm also going to share what I mean by making the working capital work for you, and we'll also formally launch the book in this session. The agenda for the session is we look at the introduction, what is the topic, we understand what is the entrepreneur's mindset, we look at how the India growth story is shaping up, then why do we really need to focus on the working capital, why it is important. We'll formally launch the book. I'll share in detail the ESCOR framework, and then we will review what the book is all about and what do we see in the book, what are the contents here. So let me start with the background. As I was sharing with you that for last 1.5 years, once we started looking at the COVID, we started working with companies to help them manage their business continuity. So we created a framework, an Excel-based framework, wherein company could systematically understand what is going to be the impact of COVID on all its operation, how they can ensure their survival, and how they can grow. So I worked with multiple agencies, with the multiple bodies like Stray, and also with some newspapers, IMC, Thane Velapur Association, to help its members understand how they can prepare themselves for it. We did exclusive sessions for chemical industry, and this particular whole working that I was doing led to my first book, which was Surviving 2020. So this book was a practical guide for SMEs to see how they can survive the COVID-related challenges and how they can prosper. Building on this particular book, since last December, we started with helping companies how they can transform their business and see how they can realize the growth potential that we believe existed for them. That point in time, the biggest realization was that a lot of these companies, the primary challenge is going to be about the working capital. They had the opportunities. However, the way they were operating the business before, the situation did not exist. So they did not know what to do with that. And because that so-called running was not really happening, or so-called rotation of the money was not happening, everybody was struggling with what they need to do. So we started looking at what we can do. What we realize in this period is that the entrepreneur right now is really prepared for growth. They firmly believe that India has the potential. They are willing to improve their skills. The earlier generation of my way or the highway is gone. People are willing to improve on their skills. They want to embrace the challenges, but they want to grow. They want to work hard. They want to gain mastery on the subjects they are not comfortable with. People are far more open to acceptable feedback now, and they want to improve. And most important, they want to build on the setbacks. They understand that they may have gone wrong at some other places, but they want to correct it. And with this growth mindset, now people are willing to embrace the new world. People are willing to embrace the digital world. People are willing to embrace the world beyond the COVID. Or for this particular kind of people with this growth mindset, we started looking at what we can do. And then we looked at what's a larger India growth story. So the India growth story remains stronger than ever. So everybody from the World Bank or the IMF, everybody is convinced that India is on its path to recovery. everybody believes that India is going to show much faster recovery compared to all the other countries, and we are looking at substantial recovery to happen in this year. And for that recovery to happen, people are coming up with different theories regarding how it can happen. So some people can be saying India is basically moving at a gradual recovery. People are talking about the U-shaped curves, but everybody is convinced that India is going to recover. And when this India is going to recover, those Indian MSMEs who are going to be the fuel for running this growth, people who are going to drive this economic growth, the country with its ambition to grow to the third largest economy would need these Indian MSMEs to play their role. I personally believe that the large companies have already run their distance. They have covered whatever they could. Now the growth primarily needs to happen in MSME sector. And for that, the Indian MSMEs need to prepare themselves for this growth. And why do they need to prepare this for growth? Because right now, the world is looking at India. The global supply chains for many years operated with only one driver, that was the cost. And that is where China used the cash and carry model very effectively to manufacture in bulk and sell. Now, the pandemic has told the world that they need to look at responsible partners. For many years, the global companies relied on India as an engineering hub and China as the manufacturing hub. The whole diplomacy around the vaccine or everything that has happened, the way India responded to the challenge, the way India was able to manage its own challenge has now give the confidence to the global superpowers and all the global companies that this country is willing to go to the next level. And that's where we are seeing some beautiful things coming our way. So now we look at why do we really need to focus on this working capital. So the story is not new. So this is an article which is pretty old. It talks about that 47% of the companies believe that it is not about the sales growth. The major challenge for Indian MSME is the working capital. This has all been happening. This year, to compound that particular challenge, what we are hearing is, this is one of the famous articles which went viral on from Times of India, wherein the president made a strong argument that the India MSME earnings, because of the whole COVID situation and the lockdowns, have gone down by 20 to 50%. If the earnings have gone down by this much of percentage, you imagine what would have been the impact on the cash flow. That is where the government had to step in, and government brought in schemes like emergency credit line. The newer resolution schemes have come in, which are basically trying to liquidate different level of liquidity to the business, something which did not exist. So the government is taking the first step for the MSMEs to get certain liquidity to grow. So earlier it was at 15%, now we are looking at 30%. The restructuring is perfectly possible. Even the SMA to NPA accounts also can now be restructured and their records can be made clean. So all the facilities are available. The other part that's coming into India is that we have lots of funds that are coming into India. The World Bank has already approved this. The different investment firms are looking at India in a different way. So we can definitely expect a lot of investment to come to India. And the fourth dimension, which is something unheard of, is basically the fintech startups. So India at this point in time is seeing four different things. So one, there is a challenge on the working capital. The other side, the income has gone down and companies need to look at building up their revenue. If that particular thing is taken care of, believe me, the required liquidity is not a challenge. The global funds will flow into India. The funds in India will also be right now available through different kind of mechanisms which did not exist before. Things like fintech startups coming into India and offering loans at a different level. However, for anybody or for any MSME owner to capitalize on this opportunity, they need to have their books clear. The moment you talk about a technology, what's going to happen is that it is basically going to ask a certain set of information. And if this information is correct, you are fitting into those particular criteria, it will be very easy for you to get the loans. But if you are not fitting into those criteria and you have not looked at your business correctly, then you are going to struggle big time in getting any kind of funding for your business. That's where it's very important for us to understand what is the ideal working capital that we should have deployed, what is that we have actually deployed, identify the difference between the two, and then see how you can optimize this working capital deployment. Similarly, it is very important for you to identify what is the cost of working capital that you have deployed. And not only the known component, but the hidden component as well. The bank interest is something that you will know. However, what's going to happen with the inventory that you have kept? What is going to happen with the delayed payments? So all these things need to look at, and you need to identify what is the right cost of working capital that you are incurring in your business, and then work on optimizing the cost as well as the need of working capital for both. Understanding this requirement, I decided to then start writing my own book. So we started working on something, and we started with a basic health check. So we started working with the company from different perspectives, and then we worked as to how things have to happen. Then we debated amongst ourselves between me and the two Amits to see how we can take the things forward. Then this is the point in time I decided, okay, let me write the concept together in the form of a book, and I started writing it. The family got involved. They decided to support me in this particular account. My parents stepped in, my brother stepped in, and I worked with my mentor to create this particular book. And with this particular effort, with the idea of helping Indian MSMEs to identify what is the right amount of working capital that they should have, and how they should look at growing their business, how they can restructure their profitability, their working capital portfolio to improve their profitability, we decided to launch this book. So when the writing was complete and we had the initial draft and we were actually debating as to what next, we realized that this particular book needs a foreword. And this needs to be endorsed by somebody who is an aspiration. So what we then looked at is what's ultimately going to happen with any entrepreneur when he's creating a business. When he's running a business, he's going to work hard for many years to see what can happen, how he can create a value in his business, right? We all say that I've worked in my business for about 20 years, 25 years, 10 years, 15 years, and this is the value that I have created in my business. However, at some point in time, any entrepreneur would like to then realize this value. He would like to unlock this value. And who better than our own Mr. Rajan Bhatia, who can then subsequently get in and help us unlock this value. So when we wrote this book and created the whole content, I requested Rajan for his time, and he was kind enough to help me understand my book, and then he also wrote a foreword. And that is the point in time I realized that this is an amazing, this is a great opportunity, maybe whatever you may like to call it. But the book actually starts from a company wherein you can understand what are the challenges that you are facing, create a strategy for you to survive, from survive to break even, and then to grow through an exponential growth. And where you are going to ultimately lead is to this gentleman, Mr. Rajan Bhatia. I would request Rajan to have his view and then formally launch the book here.
All right. Thank you so much, Charudatta. How are you? How are you, my dear friends?
How are you doing, sir?
How are you, Khushbu? Happy to see all of you here. First of all, my heartiest congratulations to Charu for such a brilliant effort, which the book which he has written, as he has rightly explained, with lot of efforts and lot of hard work has gone into it. So my best wishes for the success of this book, and I am sure this is going to be Amazon #1 bestseller. So my dear friends, my little suggestion would be to just go and grab your copy now. Just a one-line message if you want to hear from me about the book, because I have read the book, and it's my privilege and it's my absolute pleasure to actually write a foreword. It's an honor for me which Charudatta has given me, and given me the opportunity to write my views about the book at the initial pages of the book. So I feel this brilliant book, Making Working Capital Work for You, has wonderful messages and tools and techniques and great strategies for all kind of business owners. Whether you are a startup, whether you are a small business owner, or whether you are a mid-sized company, or whether you are a large or very large company, cash is the king, my dear friends. Sales is vanity, profit is sanity, and cash is the reality of the business. And that is what is the point Mr. Charudatta has, kept in the book as the focus of the book. So I am sure that this book is going to be really useful for all of you. Mr. Charudatta Pandey has mentioned various strategies and frameworks which can transform your company and can make it really cash rich and profitable, my dear friends. And what is the best thing I like about the book, and I like about Charu? The best thing and the most valuable thing which I really appreciate and admire in him is the simplicity which he brings in. The simplicity, the humbleness which he brings in his conversation, and the same is reflected throughout in each and every single page of the book. So my dear friends, it's my definitely a great suggestion for all of you is to just go and read the simple messages which are given in the book, which are yet very practical, very simple, very much actionable strategies on the management of the financing and working capital of the company, which I know is the heart and soul of any company. Any company, cannot work without cash management. You can have 100 crore sales, but if all your money is stuck with the debtors, or if all the money is stuck in the inventory, it does not give a good picture. However, if you have, let's say, 20 crore turnover, and if you are a cash rich company, you will be in a much better position. That is what has been, reflected in the book. So, I'm so sorry. I strongly recommend this book to all the entrepreneurs, all the business people, all the aspiring entrepreneurs to read it as a manual, as a daily manual for your business working capital. And I firmly believe that this book will be immensely useful for all kind of businesses, be it startups, SMEs, or large companies. So once again, I wish all the very best for the growth and success of this book, which has been written by Mr. Charu with a great effort to help all kind of businesses. And also, besides the book, also his webinars, he keeps on doing useful webinars and power series and master classes, which I must say that all of you, do yourself a favor and make sure you buy this book now and attend to his power series. So with that, once again, my heartiest congratulations and best wishes to you, Charu.
Thank you so much, sir, for your kind wishes and for your encouragement. Thank you.
My pleasure. Thank you.
Let's now formally have a look at the book here. So with the working and with the ultimate authority guiding us on what the aspiration is going to look like, we actually decided to formally launch the book. With your permission, Rajan sir.
Go ahead, and it will be our honor to be in this event. Yeah. So a round of applause. We can have a virtual applause probably.
Thank you so much for your wishes. So this is how the book is going to look like. It's available on Kindle as well as a physical copy is also available. The links are here. I'll share them, the links in the chat here. So this is available in Amazon. So let me walk you through what I'm going to cover. So this particular book is based on a framework called ASCOR. Okay. This framework starts with assessing what is the working capital that you need in the business. It takes two views. First, it will help you calculate what is the ideal working capital that you have deployed, and then it will tell you what is the what is the actual working capital that you have deployed. Then we can calculate the difference between the two and identify the reasons for differences. Then it will take you to identifying the sources of working capital. What are the sources of working capital in your own business? They would vary from business to business. Then we calculate the cost of working capital. It will tell you what is the known cost, and it will also help you identify the hidden components. Then we look at what are the opportunities for us to optimize the need and cost of working capital. And once these opportunities are identified, we can then restructure to improve our profitability. That's what the framework will cover. So let me elaborate on each of the stages here. We will start with assessing the working capital need. In this case, we would have three primary players who will determine what is the working capital that we need: the customer, the vendor, and our internal stakeholders. So the client will decide what are the payment terms for order, what is going to be the delivery time and the lead time for us to procure the material and help him with that finished product. The vendor will also have got his own term and then the lead time for him to get the material for us and then for us to reach. Our internal team is going to decide what is the time that we would need for us to convert this material into finished good, how we are going to plan the raw material, the production and the dispatches, and what are the inventory levels that we are going to hold. These three things put together will decide what is the total working capital that we need. So when you want to identify what is the ideal working capital required, we can simply calculate that by understanding what is the monthly sale that we are doing, what are the monthly procurements. I look at the difference between the two. To that particular working, we can add what are our monthly costs, including our rentals, salaries, statutory payments, the loan repayments, any other contractor payment. We add all of them and a month's inventory. That will give us whatever should be the ideal working capital that we can hold. Then we can calculate the actual working capital deployed by using the formula. The working capital is equal to the current assets minus current liabilities. And that will tell us what is the working capital that has been deployed. The differences between the two is something that we'll work on and identify what are the challenges. And then we look at how from wherein we have sourced this money, what are the limits that we hold, and what is the rate of interest. The second bit is understanding what are the sources. This whole working capital that you have identified, from where that capital has got deployed in business. Always when you're starting a business, it's going to be your personal finance, the money that you are going to put in. Secondly, as you grow, there is a confidence the client has in your abilities to deliver. He will give you certain advances. With some track record, you will start getting credit from the vendors. And then over a period of time, after a year or two, you would be able to secure some limits from the bank. So all these things put together will give you the requisite working capital for you to flow. However, in most of the cases, this is not sufficient. So then comes a component which is called unsecured. Unsecured can primarily come from three different sources. First, you can go to your friends and relatives and ask them for some money. When you are stuck and your working capital requirement is more compared to what you have, you can ask it from family and friends. That is unsecured. However, that will come at either a zero cost or a very less cost because they will tend to offer you at a limited rate of interest. The second part is you can get it from NBFCs. That may come anywhere between 11 to 16% based on where you are sourcing it from. And the third one and the biggest challenge is when you are taking it from the private lenders. That's where it can go from anywhere at about 2% to 3%, 3.5% per month. Which means that practically you are going to end up paying anywhere between 25% to 40% as the cost of interest for one particular year. And this is when the working capital trap sets in. Your profitability has gone into your cost of working capital. There is no realization of the profit. And in spite of running the operations for multiple years, you actually end up getting nothing. Practically, it means that you are running your company just to repay the loans that you have taken. That is where the title of the book comes in. Are you able to ensure that your working capital is working for yourself, or you have got that working capital in a way wherein you are actually ending up working all your life just to repay the working capital loan that you have taken? It's important to control the unsecured component in your business. And that's when the cost of working capital is also critical. The measured part is known. When you take some money from the bank, they will give you a clear idea of what is the total limit. If you take the unsecured loan also, you clearly know the rate of interest. And this complete cost of working capital is always known. Now let's look at the components that are not known. These are hidden components. Now inventory. If you hold one particular item for about 2 years and you have already paid for that item, which means that practically the cost of that item, because you already paid it, should go down by the rate of interest, by the interest component for 2 years. But that's not calculated, right? So we end up losing that liquidity. We end up losing that productivity of the money that is getting stuck into our inventories. Similarly, the payment cycle. In today's scenario, clients are using this particular approach very, very diligently. They use it saying that, okay, if you need a payment, just give us 10 days time, just give us about 5 days time. Let's look at the price point to be remaining the same, but you need to give us the credit period. And somewhere the money that used to come in 30 days moved to 45 days, and now it has moved to 60 days. If the payment which was expected in 30 days now is going to come at 60 days, how you are going to look at your fixed expenses for next 30 days? How you are going to ensure that you will be able to procure the material for those 30 days and get the production in so that your business cycle continues? These incremental costs that we are getting are not explicitly calculated, and those remain hidden. The final component, which is the biggest challenge in Indian MSME sector today, is understanding how you should treat your own capital. A lot of people believe that this is my capital which I have put into money, into the business. So should I take any interest? Or maybe chalo, let's look, if I look at it as to whatever that I'm getting from the bank, I can look at that cost. Some may look at it as a bond rate or different, any kind of rate that you take here. My question to you is, how do the banks lend you? They will ensure that your assets are mortgaged, your stocks are hypothecated. They will ensure that each and every component that you have got, for whatever the loan that they will give you, at least 1.5 times, at least 1.3 times of that particular amount is they have some kind of a reasonably good mortgages. Okay? So their money is always protected. And after ensuring all this security, everything, then only they will give you any kind of loan. Whereas you are putting your own money into your business without any assurance of return. If you do good business, then you will get those returns. Else, for any kind of unforeseen challenge, you may even end up losing that complete capital. There is no guarantee. So if it is completely unsecured, what stops you from assuming that, let me assume the rate of interest on my own capital to be double of whatever the rate of interest that I am paying to the bank. With this particular assumption, if you calculate the total cost of your product and the profitability, and if you remain profitable with this particular cost, you can be absolutely sure that the money that you have invested in your business is going to grow over a period of time. If your business is not justifying this particular cost, then you have a challenge. Once this is known, then let's look at what are the opportunities for us to optimize. So we look at the optimization from two perspectives. We look at what is the how we can optimize the quantum, and then how we can optimize the cost, both. So for the quantum optimization, we'll first start with looking at what is the overall conversion cycle. So we will first start as to what constitutes a conversion cycle. So right from the time you get an order from the client, you procure a material. After that procurement, you convert it into a finished good, you dispatch it, it reaches a client's place, a formal GRN is done, and you get the payment. This is your complete cycle. Now in this cycle, whatever that you can squeeze will actually reduce the amount of working capital required. Let me elaborate. So when you plan a production for a client on day 25, you need that material to come to your client by about day 20 or day 21. If that material comes to your client on day 2, then the liability gets created on day 2, and you will need to pay that particular vendor much earlier before you are actually producing it. So the material needs to come just about on the time. When you dispatch a material to a client's location, you need to ensure that the day it reaches there, a GRN is made. Because only when the GRN is made, from that point in time onwards, the client will start calculating his credit period. If there is a delay in GRN, the payment cycle also gets delayed. So you need to work on all these aspects. You need to negotiate your credit terms with your vendors as well as with your clients. You need to align the payment that you are going to get from a client with what you are going to pay to the vendors. In today's context, wherein everybody has a challenge on the working capital, it is perfectly possible for you to take your vendor into confidence and tell him that this is the business that you are expecting from a client. These are the terms, and you can give him assurance that from the moment I get the money from the client, within 24 hours, the amount will be credited to your account. That's an assurance, but you need to give me the credit period what the client is giving you. That can ensure that you would be able to improve your business. You will be able to improve on your working capital requirement without compromising on any production capacities. You can take your vendor into confidence. The inventory levels will need to be reviewed all the time. You need to maintain inventory which you can consume in next 3 months. If there is any other inventory which is beyond 3 months, it's time to liquidate that. Don't keep that in your books. Finally, the cheapest form of working capital is from banks. Your own capital has to fetch you double the rate of interest from what the bank is offering. So the cheapest is going to be from the bank. So ensure that you get your maximum working capital from the bank. And important thing, these days, structure your transactions. Take your client and vendor into confidence. For a contracting companies who were so far operating with a scenario wherein they were buying everything on the behalf of the OEM, then converting and giving it back to the OEM, it's perfectly possible for the companies now to look at a scenario wherein the inventory can directly be purchased by the OEM. The conversion company, the contract manufacturer can simply become the converter, and then give it to give the final output to the FMCG company or any OEM who is looking at the contract manufacturing. This will ensure that the working capital requirement for the smaller player is far lesser and they can operate within their own means. Once you have looked at the quantum and the cost, it's time to look at the restructuring. So restructuring needs to happen at different level, starting from the process itself. So on the conversion side, three things need to be looked at. The material has to come to your premises just in time. You need to take care of all the supply lags and ensure that the material comes to your plant just in time and also reaches your client's plant as and when it is required. So there is no delay on either side. And most important thing, the payment terms, whatever that you have agreed for, are realized all the time. If the client has given you a commitment to pay you in 30 days, you need to ensure that you are actually getting the money in 30 days. I would strongly advise that each and every one of you should have a dedicated person only monitoring the relational payment terms. You should look at working with the client to ensure that whether the delivery has happened, whether the invoices have been received, the GRN is done, the invoices have been booked. They should work proactively with the client's accounting team to get the payments in time. The situation is such that we need a dedicated resource for that. Once this is done, then the company can look at inventory. You can look at how they can optimize the overall inventory by reviewing their thresholds. If your client is looking at reduced demand or reduced production from you, you should also bring down your thresholds accordingly. The earlier values do not hold any good. Aging is not allowed in today's context. Whatever that can be converted into FG in 3 months is what something you should hold. Everything else you should simply sell. Minimum order quantity is equal to whatever the order that you have from the client. If the client is willing to give you, for in particular in case of plastic industry, if you are buying 5 tons of material from Reliance and that's going to get converted into 50,000 pieces, but the client wants only 15,000 pieces, then you need only 1.5 tons or less than that. You need to work with the client and say that this particular component, I'm going to buy it from a dealer and that's going to come at this price. It may be a couple of percent more, but that is still okay because it doesn't, if you hold the other 3.5 tons with you for this longer period, then the cost of holding that inventory is going to be higher compared to the returns that you are going to get. So you can pay a bit more, but get whatever that you need now. Then the limits, you need to work with the bank to improve your limits as much as possible. Then once this is done, you should work with both the vendor and client to see how much of transaction you can move directly between the client and vendor. So between them in terms of the cash flow. The moment you are receiving cash from the client, you can go back and pay to the vendors. This will ensure that your own deployment of your own cash deployment in the business is minimum. So aligning the payment terms between the client and vendor is the best way to manage your cash flow in today's scenario. And after that is done, then we need to start innovating. We can look at things like bill discounting, using letter of credit, or even other new age platforms which have come for different kind of purchase discounting. All these can be used to ensure that you are restructuring your working capital to improve your profitability and improve your chances of surviving and doing some amazing things in the years to come. This is all I wanted to cover. Now I have covered all of this in the book. This is the Amazon link. Let me show you how this is going to happen. So the theory part of it is definitely there in the book. However, in addition to the theory that we have discussed, the book is going to have some very, very practical insights. So let me share you what it has. So this is the book, and the book has all the content from what we looked at. So all the messages, what we looked at is all there here in the theory. But the beauty is that the book is going to end with these kind of assessment templates for you. So the assessment templates are going to give you, it would start with understanding what is the ideal working capital that you would have. So it can tell you what is how you can look at the average payables, average receivables, and then use your monthly fixed cost conversion time to identify what is the ideal working capital that you need. You can then compare that with what is the standard working capital calculation. So all these templates as to how you can calculate the differences. And once these are there, the book will tell you what is the difference. And based on these differences, what are the reasons? So it will guide you through identifying what are the reasons for the incremental working capital deployment in your business. Once you have done that, you can look at the sources of working capital, the cost of working capital. And once this is the cost and sources of working capital are done, you can then get into the restructuring. So the book will give you a very systematic framework of how you can look at optimization. And then finally, the book is going to end with a template for action plan. So you would have a very practical approach of whatever that you are going to learn in the book, you can go ahead and deploy that in your business. So the idea is ultimately to ensure that the learnings from this book get converted into business benefit that we are committing to you. That's the part. So this is what I wanted to cover as a part of the book overview. I would urge you to share your questions, and then we can explore what the book will be sharing more with you and how it's going to contribute to your success. Thank you so much, everybody, for your wishes. I hope you are able to hear me well now. Please share your queries here. I have made a sincere attempt to ensure that the book not only gives you the detailed insight what Rajan sir has been sharing. In addition to that, it's also going to give you the templates of how you can do in your own business. I believe it's very important for a book to result into the ultimate objective that we looked at. So the objective here is to ensure that we have the cash with us for us to grow, and this is what's going we can realize through the templates that I have shared here. Thank you, Kisharji. Thank you, Vishaka. Thank you, Mr. Balaji. We completely agree, sir. This is the cash is going to be the king. And would love to hear your feedback here, sir. The cash is going to be the king in this particular scenario. And believe me, there is going to be a great opportunity for us to grow and get our deserved place. I strongly believe that the Indian MSMEs haven't got their due in the Indian economy. The people talk about something big rather than looking at something very, very practical. We need to have our own businesses get their real potential. Mr. Balaji, on the receivables count, the first ideal practice is to have your balance confirmations done. So what the technique that we used to use in certain cases wherein we had these challenges, we use the method for the balance confirmation or the reconciliation to ensure that what is reflecting in our books is currently reflecting in our client's book as well. So that was the first thing that we did. And after that, whatever the queries where we resolved them to ensure that both the things match. And then we worked with the client to create a resolution because we had a challenge there, so we created a resolution framework to ensure that we are collecting the payment in stages, and we were able to recover the complete amount in about 4 months. But we have managed to do that. You can actually start with the balance confirmation or the reconciliation. That's a good, a safer approach to take. Mr. Desai, my suggestion right now is that if you are holding a finished good, okay, if you are holding a finished good with you, and then that point in time you need to see as to what's going to be the cost of holding that particular good compared to the profit that you are realizing. For example, if you are operating at about say 10% margin and you may need to hold that material for about another 6 months for you to realize, then even at 1% about you will end up losing the 6% at least. So in that case, if you can actually offer a 5% discount and realize that cash upfront, you will be able to use it for your business and gain something more out of it rather than holding that inventory for 6 more months. So you can take that practical approach. And on the raw material side, whatever that if the client is asking you to hold some material for him, my request is that you should ask him to pay for that inventory. Tell him that I will hold that inventory for you as paid up inventory, or I can sell that raw material to you right at the cost, but pay me that amount. Let me have that liquidity to run my business. I hope I was able to answer your queries here. And the book here, along with the practical templates that we are going to talk about, I'm absolutely sure that that's going to help you look at your business from a completely different perspective from working capital way. You would be able to look at your business as to what is the ideal working capital, what is that you have actually deployed, and then identify the difference between the two. This is what's going to throw out a lot of challenges that you have faced in your business. Some of them could be completely justified. Some of them would have a lot of difficult things to answer for yourself. Believe me, it could be some of the decisions that you have taken. It happens in our business, right? And during the flow of working, we take certain calls that become a challenge over a period of time. But if there is a time to correct it, this is the time. I agree with you, Mr. Balaji. The part of money is always going to get stuck into rotation. And for this particular challenge, what we would recommend is that you should look at what is that's where the whole concept of ideal working capital will come in. So the moment you look at the ideal working capital, you would realize as to what is the additional capital that you have deployed. And this is where you can make that attempt to bring it down closer to the ideal working capital. And that's where this component which is stuck will go down over a period of time. And my request to you would be that if you feel that there is something which is getting stuck, you should calculate what is the cost of that particular capital which has got stuck. And accordingly, you can offer some discount to your client and get that payment out. As of now, you need the cash. So whichever it's coming in, if it is coming up with a couple of percent of loss, that is fair. Rather than waiting for that cash to come after 3 months, it is better to give 3% discount now and get that money upfront. Service industry, yes, there is a challenge in terms of because they would have the limited inventory with them, not much of this part, and a lot of them happens through the typically the rotation part. So there is always a challenge because some of them could be simply a pass through that is happening. So my request is that when there is the margins are limited, it is better to take both the parties onto confidence and see that you actually work on your service charges. If there is a situation wherein both the parties are big enough and they have their own egos and between their egos your working capital is getting stuck, it is better to align both of them saying that why don't you basically buy the material from here and give it to us, we will convert and give it to you, or we will just operate as a service provider for you, we please take away the material component from us so that we are able to manage our working well and we ensure that our own working capital is sufficient to manage our services cost and we realize our profit rather than losing our profit between the tussle that's happening between the supplier and the end client. Thank you so much, Mr. Desai. Amit, yes, this particular book is written with the idea that it should reach more and more users. And we would like this to be spread amongst the MSME users for them to get benefited from this. So if anybody is willing to look at the bulk purchase here, you can please write to me at, I just text my email ID here. You can write to me at charudatta@surut.co.in and we will work out a bulk scheme for you. At least something that I can commit here and right now is that we can definitely offer you 5 copies of the book at about 999 and we can offer you 12 copies at 1999. That's something that we can surely offer you and so that you can send it to your team and share that with your peers if you believe in gifting the books. This is my email ID. You can just drop me a note and I will ensure that my office sends you the copy at the discounted rates. Kishorji, yes, the working capital cycle typically for the project based companies is little different compared to the standard manufacturing company because this point the end is always dependent on how the client is looking at it. The strategy that I will recommend for a project based company is to have a clear mapping of your cash flow requirement, particularly in terms of the material flow, because most of the project companies, the substantial cost is the material. So you need to map your material and your conversion cost well. Once this is particular map, you can always ensure that the material costs at least are directly coming by when you are procuring the material. So if your material cost is covered all the time, the maximum your involvement or the investment into the business is going to be only about the service charge or your technical resource cost, which would be manageable. So the strategy here would be basically to ensure that your payment or the payment from the client is aligned to the material procurement that you are doing. Okay. The banks use a typical formula called drawing power. So they use a methodology called drawing power to identify what is the working capital a company can have. So their approach is what are the total receivables, what are the total payables you have, the difference between the two, the inventory amount that you are holding. So based on the type of inventory that you are holding, they have certain criteria on what is the percentage that they can take. So they calculate the difference between the receivable and payable, and to that they add the inventory level. And then they typically tend to deploy either 75% or 80% of this overall value. And that is what the banks term as a drawing power. Sure. Thank you so much, Rajan sir, for your valuable time and these amazing insights. It was an honor for us to have you in this particular session, and personally for me to write the foreword for my book. Thank you so much, sir.
Thank you so much once again, Charu ji, for inviting me to this really amazing event of yours and book launch. It's really a pleasure and honor for me. Once again, thank you very much, and all the very best for your book. Thank you so much. Thank you. Bye-bye.
Siddhartha, absolutely. You would have the clear answer in terms of for your business, what is the working capital that you would need, and how you can ensure that you go close to that. It also has got some strategies for you regarding what are the different schemes available for you if you are working with the government agencies. So it covers part of it. It covers the details of the portal, how you can use that, and that will give you a clear framework of how you can manage your working capital. Okay, bank guarantees, okay, a tricky situation here, but the bank guarantees, if you are provided, then that's till the time they actually realize you need to factor that particular amount as a liabilities over here only. If there are two ways in look at it. If you are basically offered, depends on what kind of a bank guarantee that you have offered, but whether it's advanced bank guarantee or a performance bank guarantee. But the ideal way to look at it is that whatever is the complete amount that you have offered as a guarantee should be factored into a separate account as a bank guarantee. Even if you don't want to show it as a liability, you may show it as separately as a bank guarantee. Rajendra, you get to hear that you are basically into that you are able to get the payment in good time, and you basically this is about 2 to 3 months of working capital cycle that you need. You should ideally try and see how you can bring it down to about 30 days. That would be the ideal thing. And if there is a regular cycle which is getting delayed, you may like to work with your client to see if they can help you with bill discounting. So what happens in case of bill discounting is that you can present the bills to your client's bank, and then they will pay you the money upfront, and then they may charge you about 8 to 10% per annum based on the client's agreement with the bank, and that is good enough. So you should actually work on getting the bills discounted to ensure that you don't really have that 2 or 3 months of risk at this point in time. Okay, you can reach me at two ways. You can reach me at charudatta@surut.co.in, or you have the choice of visiting our website, and from there you can actually book an appointment. Okay, great point. What I'm going to launch right now, immediately after this session is over, is that if you are buying the book in next 10 days, then you can actually book an appointment with me. You can book a free consulting call with me by logging on to our website. You need to book an appointment. You need to share what are the meeting slots that are comfortable with you, and you need to put in your Amazon order number and put in the 3 slots. We will try and fit into one of the slots, and we can answer your queries there directly. So you can book a 15-minute call with me You can log on to www.surut.co.in, and on the top only you will see a book and appointment calendar. There is a logo over there. You can click and you can book an appointment with me. This link is going to be active for next 10 days. So if you're buying the book, please buy it now, and you can discuss your challenges with me, and we can together explore how we can answer how I can answer your queries and what kind of solutions we can find for your challenges. You can share your queries here in the chat box or in the Q&A section as well. I'll be happy to answer them today. I believe that I have been able to answer your queries well. So that I don't see any more queries here. So I take this opportunity to thank all of you for your time today and joining me for this webinar and the book launch. I sincerely believe that my contribution to your success in terms of this book will be well appreciated and it will be pursued in the right way. Please feel free to reach out to me if you feel that I need to build on this book and there are a few things that I would like to add. I look forward to your feedback on this book, and this is my sincere contribution to the growth of Indian MSME industry. And I simply believe that the Indian MSME industry will achieve its true potential in next 10 years. Wishing all of you all the very best for your success and for taking your company from a good one to a great one to making it an exceptionally good one. Wishing you all the very best. Please take good care of yourself and your loved ones. Thank you.